The end of the year has a way of sneaking up on you, doesn't it? One minute, you're deep in Q4 strategy. Next thing you know, it's December 20th. Your inbox is full of just checking in before the holidays emails, and you're realizing half your financial to-dos are still sitting on the shelf. And let's be real, year-end closeout can feel overwhelming. It's deadlines, it's paperwork, it's last-minute surprises. It's the feeling of, if we don't get this right now, we'll be carrying the mess into January. But here's the thing, year end doesn't have to be a fire drill. When you approach it intentionally, it can actually become one of the most clarifying times of the year. A reset point, a chance to align your books, your cash, and your tax strategy so you start the new year strong. So today, I want to share 3 steps we believe every founder should take before year-end closeout: account reconciliation, invoicing strategy, and tax prep. Let's break them down not as a checklist, but as practices that make you a stronger leader going into next year. Hi, I'm Pam Meissner, COO and CFO at Cathcap. And today, we are going to cover 3 must-do steps before year-end closeout. 1. Account reconciliation. Catch the surprises early. Let's start with account reconciliation. Sounds technical, but here's the simple version. It's making sure what's on paper matches what's actually in the bank, and you'd be surprised how often they don't. We've sat with founders who thought they had $200K more in available cash than they really did, because a few transactions never got coded, or teams who discovered duplicate expenses, 2 systems paying the same vendor because no one caught the overlap, or revenue that looked booked but was never actually collected. None of these were intentional. They were just the quiet leaks that happen when things are moving fast. And the danger, when you don't reconcile until tax season, those surprises compound. You make decisions off numbers that aren't true. You think you have a longer runway than you actually do. And suddenly, you're reacting to a shortfall you could have fixed months earlier. One founder told us the scariest part wasn't that we were short on cash. It was that we didn't know it until too late. Here's the mindset shift. Reconciliation isn't about looking backward. It's about getting a clean read on the present, so your future decisions aren't built on sand. And doing it before year end? That means starting January with clarity, not confusion. 2. Invoicing strategy. Cash in hand beats cash on paper. Next up, invoicing. Here's a painful truth. Revenue doesn't keep the lights on. Cash does. And too many founder-led companies get to December with a stack of invoices still outstanding. On paper, it looks like the year was strong, but in practice, you're chasing receivables while trying to fund January payroll. We worked with a client who had over $300K in invoices sitting unpaid at year end. Great top line, terrible cash position. They started the new year already underwater. That's why invoicing strategy isn't just about sending bills. It's about designing how and when cash actually lands in your account. Some of the smartest founders we've worked with do 3 things before December 31st. They accelerate invoicing where they can, sending bills earlier so cash clears in the right year. They follow up personally on outstanding payments, not just leaving it to the system. And they review payment terms, asking, are we setting ourselves up for chronic lag, or can we reset expectations? One founder put it this way: getting those invoices collected before year end wasn't just about cash. It was about starting January without a financial hangover. And that's the key, because when you align invoicing with year-end close, you're not just chasing money, you're creating momentum. You're building a clean handoff into Q1 instead of carrying last year's baggage into the new one. 3. Tax prep, no more April surprises. And then tax prep. The thing most leaders want to put off until suddenly it's too late. Here's the trap. If you only start thinking about taxes in March or April, you're not planning, you're reporting. And reporting is where surprises live. We worked with a founder who got hit with a six-figure tax bill they hadn't budgeted for, not because the business wasn't profitable, but because they didn't plan for how profitability would actually show up on paper. No one likes cutting a check they didn't see coming. But here's what shifts. When you prep at year end, you know where your taxable income really stands. You can make smart moves before December 31st that shift your position, whether it's expenses, investments, or timing decisions. And you start the year without the anxiety of a mystery bill waiting around the corner. One founder told us, tax prep used to feel like waiting for a shoe to drop. Now it feels like part of our strategy. That's the difference between scrambling in April and preparing in December. One drains you, the other strengthens you. And here's the deeper point. Tax prep isn't just compliance, it's leadership. Because when you walk into the new year, knowing what's ahead, your whole team feels that steadiness. Closing, what year-end can be. So let's step back. Year-end doesn't have to be a mad scramble of forms and checklists. It can actually be the most clarifying moment in your financial year. When you reconcile accounts, you remove the blind spots. When you tighten your invoicing, you bring cash into the present. When you prep for taxes, you walk into January confident, not guessing. And that's the deeper point. Closeout isn't just about finishing strong, it's about starting stronger. We've seen founders who used to dread December suddenly look forward to it, because instead of carrying stress into the new year, they carry clarity. So here's the question I'll leave you with. If you closed your books today, would you be proud of the financial foundation you're carrying into next year? Or would it feel like unfinished business following you across the calendar? Because the truth is, you still have time. And what you do in these last few weeks can shape how the entire next year feels. So take the steps, get clear, and give yourself the gift of a clean start. Thanks for watching.